Asma doing good.
How's your evening?
Yeah, it's good. Had a nice win.
Not bad on your birthday.
Yeah, that's proper scare.
Alright guys, if Karen talking, it's going to be live like that. Talking about it on air. Alright, morning everybody. Alright, Joe's in Joburg today and tomorrow, so you've got to deal with me for the next 2 days. Alright, let's get started. S&P last night, it actually says here US stocks were unchanged, but they're actually up a bit. I see 6 points on Bloomberg. We had a big fall by Twitter after earnings were leaked. They're down over 22% at one stage. Not 100% sure where they closed. It looks like revenue was a miss at 436 million, below the expectation of 456 million. But the adjusted earnings actually looks like a small beat, so I'm not sure how it's going to trade from here. We had home prices that rose a little bit more than expected, rising 0.9% versus 0.7%, and consumer confidence, which decreased in March due to stronger oil prices and a poor jobs report. In Asia this morning, not a whole lot apart from in Aussie. Aussie was down over 1.5%, led by the banks. But we also had a sell-off in some of the commodities. So keep an eye on commodities. After that massive run we've seen over the last few days, maybe we get a little bit of a pullback there. We had Billy's down just over 1%. In Hanks and on the Hang Seng we had 10 cent. I think they were marginally up the last time I looked, but actually up 0.3% as of right now. So Naspers really underperformed 10 cent yesterday. Maybe we get a little bit of a bounce out of Naspers this morning. Charts of interest today, saying the JP Morgan Emerging Market Currency Index up 5% over the past month and a half, which is the largest rally since June to September of 2012. You can see we're in this massive downtrend. It just seems, going along, catching the tails of the mining stock rally. It seems like around the world they've just been buying up all these beaten down stocks and currencies. All in the same shot, but we'll see if it lasts. I doubt it. I'm sure the bounce of the rand yesterday was probably to be sold. Corporate action. We have Barclays out of the US today. We have Volkswagen, and we've got Deutsche Bank. Barclays is at 9 o'clock US time, 3 o'clock in the US is Volkswagen, and before the market we've got Deutsche Bank. And then key factors today. Nationwide House PX month on month, which came out at 8 o'clock. Looks like quite a bit better than expected. Then M3 money supply to the Eurozone, as well as consumer confidence at 11. We have mortgage applications out of the US at 1. At 2 o'clock we've got German CPI, 230 US GDP annualized quarter on quarter. 4:30 we have US crude oil inventories. And at 8 o'clock we've got the big FOMC rate decision. So keep an eye on that. That's what's going to be moving markets. All right, let's jump into the charts quickly. And obviously we had this massive rally out of the mining stocks yesterday. We had a whole basket of them. They were over 10% at one stage. Impalas, Amplats, Arcelor, ARI, Anglos, Billy's, all trading unbelievably well. I'm not going to show them. It's a little bit pointless. I wouldn't really want to recommend anything from those levels. So I'm just going to show some of the ones that might be of interest. Start with Aspen. Aspen's one that has been showing over the last few weeks. Looks like it's forming a very ominous head and shoulders here, so keep an eye on this level. I think this, if I have to draw a level here, it looks like it's coming in at around about this 370 level, between 370 and 371, 372 around there. We've also got the 200-day moving averages coming up there. Very important level. Keep an eye on it. If we carry on getting weakness and we push through that level and hold below there, there could be a much lower target on Aspen. The next one I want to show is Standard Bank and ABSA, or Barclays Group. These ones have been in an incredible uptrend, and they actually haven't sold off with a lot of the other sort of retails and Findy stocks that rallied alongside with them. So they've actually held it really well during this sell-off in domestic stocks over the last week. very close to making all-time highs. The all-time high on Standard Bank's 176. I think they closed just below that yesterday. So keep an eye on them. I'm a little bit nervous if it does break out. As I said, some of these other Findy stocks have started to show some weakness, and the market is very high in general. So a pullback is almost likely from current levels. So be careful if you do buy the breakout in Standard Bank. The other one I was going to show is BGA, showing a bit of an inverse head and shoulders continuation pattern. If we draw this on the closes, we've got the breakout at about 193, and it's just below there again, similar to Standard Bank. Also, it's been a little more of a choppy uptrend, but an uptrend nonetheless. So a breakout here would actually be quite a bigger higher target, well over 200, 205, 210, 210, somewhere there. But again, just be careful. Markets are high, and there could be a pullback coming. All right, next one I want to show is Barloworld. Barloworld's one we've shown a little bit over the last. I'm actually going to go to a 5-year chart here and just show the big uptrend that broke down recently. We've been consolidating underneath this trend, but they actually caught a nice bounce on the back of some of the miners, I think. Almost a little bit of an inverse head and shoulders coming up here. So we had a very pivotal point here on Barlow's 95. It closed higher than 95, just over 96. I'd say somewhere in this region. We've got the 200-day moving average coming in. 200-day moving average is trending downwards, so it's still in a downtrend. And I would say we almost broke down from this, or broke back into the uptrend. But keep an eye on it. The next few days will be pivotal for Barloworld. If it does break down from this level, from resistance here, then I would say keep an eye on sort of 92 as the next support level. If it breaks below 92, then maybe the downtrend is continued. All right, so the next one I want to show is BTI. BTI, you can see how whippy this stock is. It seems to have a quick run up and then like a big run down, big run up, big run down. It's definitely not in a smooth trend at all. And yesterday we had this big reversal on the stronger rand and I guess weaker markets. So keep an eye on this one. Possibly if we get a bounce from current levels, maybe to 670 or something, it could be worth fading. If you have a look at the previous sell-off, we had this big red candle, consolidated for a few days and then carried on down. We might be getting a similar kind of thing here on BTI. The bottom of this range I would peg at around about 630. So if we do get a bit of a continuation here, we could have about 30 rand to the downside. The last one I was going to show is Mr. Price. Obviously, I think this has caught a few guys. It's always been just buy every single dip on Mr. Price, but we've actually had a bit of a contraction here from the highs at around 283, got down to as low as 252 intraday yesterday, closed at 255. But we're getting close as well to, if we draw it on the closes, we're looking at pretty much right on support at 254 here. If we can hold this over the next few days and we get a reversal candle, possibly we could buy to go and retest those highs, as long as obviously as the market can hold. And that's all for today, guys. Good luck trading.